All right, let's get into it. Today, we're going to look past all the noise in the headlines to unpack something really subtle but potentially massive that's happening in the financial markets. We're talking about a strategic shift by some of the biggest players, and it's one you definitely won't see on the news.
And that quote right there, it really gets to the heart of it. We're not talking about flashy press releases or big announcements. Nope. We're looking at a deep, fundamental shift that's happening just beneath the surface. A flow of capital that, frankly, prefers to operate in total silence.
So here's our mission for this explainer. We're going to play detective. We'll hunt for the signals of this quiet accumulation. We'll try to understand the huge problems a company like BitMine or BMNR solves, and we'll break down exactly why this one stock is becoming, quote, institutionally intelligible. Okay, before we dive in, one really critical warning. What we're doing here is analyzing market behavior and strategic alignment. This is all about context. It is not a confirmation that any specific fund holds this stock. That's a crucial distinction, so let's keep that in mind.
Okay, let's get into the good stuff. To really understand what's going on, we first have to look for the evidence, the behavioral clues and the market fingerprints that this kind of large-scale buying always leaves behind.
So this slide really shows two completely different worlds, right? On one side, you have retail trading. It's often driven by hype, it's noisy, it spikes on news, and then it vanishes. But institutional buying, that's a whole different beast. It's all about quiet, steady absorption. Think of it like a giant, patient sponge just systematically soaking up shares whenever there's a dip or a lull. They don't chase hype, they buy weakness.
And here is our first real piece of data, and it comes from the options market. A put-call ratio this low, 0.32, is a pretty big tell. It means that way more traders are betting on the price going up by buying calls, instead of betting it'll go down by buying puts. It is a classic signal of bullishness just bubbling under the surface.
Now, the chart watchers, the technical analysts, they are zeroed in on these levels. You've got a pretty strong floor, a support level right around that $30 mark. But the real test, the big moment, is breaking through that first line of resistance. If it can get through that and stay through it, that could signal a major breakout, with the next target up there above $41. And it's not just one thing. Other signals are really starting to stack up. The price is staying above key moving averages, you have momentum indicators starting to flip positive, and the RSI, well, it suggests there's still plenty of gas in the tank. But maybe most importantly, you see that strong volume on the dips? That goes right back to that institutional sponge idea, quietly soaking up all the available shares. Okay, so we've seen the what, all the technical signals pointing in one direction, but now we need to get to the why. Let's really dig into the core systemic problem that a company like BMNR is built to solve for these giant financial institutions.
You might be thinking, well, if these huge funds want exposure to crypto, why not just, buy Ethereum? Well, for them, it's all about friction. It's a huge pain. Direct ownership is operationally a nightmare, it's a regulatory minefield, and a lot of the time it's just straight up forbidden by their own internal rulebooks. They're not built to handle private keys, they're built to handle stocks.
And that brings us to the single most important concept in this entire breakdown. An asset has to be institutionally intelligible. What does that mean? It means it has to speak their language. It has to fit perfectly into their super strict, highly regulated world where every decision has to be justified to a room full of lawyers and accountants.
And this slide, this is the solution. This is the bridge. A share of BMNR is just a plain old public stock. It trades on a normal exchange. It's held by their existing custodians. It basically takes this new, complex digital asset and wraps it up in a boring, familiar package. For capital on this scale, the path of least resistance is almost always the path they take.
But wait, because the story doesn't stop there. So we've set up BMNR as this compliant, easy-to-use vehicle. But now we get to the real strategic twist, the pivot that's turning BMNR from just a simple proxy for a price into a potential powerhouse.
And this is the million-dollar question, isn't it? It's the biggest counter-argument. A spot ETH ETF seems like it's right around the corner, and it would solve a lot of these same problems. So why on earth would a sophisticated fund take on the extra risk of a single company like BMNR instead?
The answer really comes down to this, the difference between passive exposure and an active strategy. An ETF is just a tracker. It lets you participate in the price, and that's it. BMNR, on the other hand, is an active company. It has a management team, it has a plan. You're not just betting on the asset, you're betting on a strategy built around that asset.
And this three-step process is the absolute game changer. BMNR doesn't just hold its Ethereum, it actively stakes it. Staking puts those assets to work, and in return, it generates a predictable yield. That one simple action changes everything. It transforms a speculative bet into an actual revenue-generating business.
And that yield allows them to use their absolute gold standard for valuation, discounted cash flow, or DCF. DCF modeling is all about figuring out what an investment is worth today based on the cash it's expected to generate in the future. Well, with a reliable staking yield, you suddenly have a predictable cash flow you can actually model.
And that is the bridge. That's what does it. This is what takes BMNR out of the bucket of speculative trade and puts it squarely into the bucket of fundamental investment. Now an investment committee can actually justify their position based on recurring revenue, not just on the hope that some token price goes up.
Okay, we've got the what, and we've got the why. For our final section, we have to cover the how. Because when you have this kind of institutional money on the line, the stakes for the company's performance become incredibly high. This is the execution test.
So back to that question, why take on the corporate risk of BMNR over a safer ETF? It comes down to one beautiful concept, asymmetry. An ETF gives you market returns, plain and simple. BMNR, though, offers the potential for something far greater. The downside is limited, but the upside, if management executes perfectly, could be absolutely exponential.
But let's make no mistake about this. This interest from big money, it is not a permanent stamp of approval. It has to be earned every single day and it has to be maintained. If the management team starts to slip or if their governance gets sloppy, this smart money will walk out the door just as quietly as it came in.
And to keep them around, it requires nothing less than flawless performance across the board. They demand the highest standards. We're talking ironclad corporate governance, total financial transparency, smart use of capital, and an absolute commitment to that core staking strategy that made them interesting in the first place.
And really, this is the ultimate takeaway. The biggest achievement here for BMNR isn't a new price target or some rumor about who bought in. The real story is the fact that it now makes sense inside these incredibly complex financial systems. That shift, that's the real milestone.
So, let's end with this one final thought. The thing to watch from here on out isn't who's buying in. The real question is whether the company can maintain the level of impeccable governance and execution that's required to keep this sophisticated capital from walking away. That is the bridge they have to keep on crossing every single day.